Hi, this is Dean Odell with 7 Gables Real Estate in the Odell Group. It's July 30th and it's time for another edition of Tustin Talks. We're going to be looking at the Orange County market and we're going to talk about why this market's so strong, because a lot of people just can't even fathom how this makes sense. But we've had some time to think it over and we've done some research and I think we can help you figure that out. So stay tuned here. Let's start with our charts. Okay, looking at the Orange County chart, you can see there are 4,590 homes currently in Orange County. Now that is down from 7,601 homes last year. That is 3,111 homes less that are on the market right now. Okay, so that means our listing inventory is down about 41%, and that is causing issues. Let's look now how demand compares with that. Well, you can see the V-shaped recovery we've had. We have 3,200 homes in escrow, which is the highest level of demand we have had since October 2012. Buyers want to take advantage of the interest rates. They want inventory. People have reassessed their housing needs during COVID, and this is all driving and fueling demand. Looking at the expected marketing time, we are down to 43 days. That's from 91 days last year. And if you remember expected marketing time and how that defines a market, last year at 91 days, you could see we were entering a balanced market. At 43 days, you can see now that it is a hot seller's market. Sorry to interrupt this program, but you know what? Let's make sure you're subscribed to Tustin Talks. Click on the button below next to our name, and if that doesn't work for any reason, you can just go to TustinTalks.com or our websites, the Odell Group and NorthTustin.com, and subscribe there. So let's continue. As always, though, we like to look at my favorite chart and see how the demand breaks down, and you can see a lot of green on this chart compared to previous editions of Tustin Talks when almost all of this was red at the beginning of COVID. So we are in a hot seller's market all the way up to $1.5 million, a slight seller's market up to $2 million, between 1.5 and 2 million, and we have reached a new balanced market between 2 and 4 million. And the only deep buyer's market we have is over $4 million in Orange County right now, which is amazing. So if you look a little closer at this inventory, and we just look at the dark green, because the dark green is a strong seller's market. The strong seller's market makes up 69% of the inventory out there, but the share of demand for that dark green inventory is 88%. So you can see when you have 88% of the demand for 69% of the inventory, that is going to make for a hot market. You can also see how the expected marketing time increases as the price increases. Starts at 31 days in the lower price ranges and goes all the way up to 274 days in the higher price ranges. All right, now let's look at the Orange County closed sales year over year, because this is the stuff you guys read in the paper and you get confused. It says here that we only closed 2,169 homes in the county versus 2,715 last year. So we are down 20% in closed sales. Well, headlines are what they are. They want to grab your attention. So what are you guys going to see out there? Orange County sales down 20%, right? Well, not really, because we have 41% less inventory on the market to sell. So of course we're going to have less closed sales when we have 41% less inventory. So you have to know the analytics, you have to know the full story, and that leads me to our next slide here, which I have not shown you before, but this is the Orange County listing inventory versus demand. And I think this is where people really are losing grasp on what's going on in this market, okay? So let's look at our supply and our demand figures for 2020. If you remember, our supply was 4,590 and our demand is 3,200. That only leaves 1,390 homes. Now remember, almost 20% of the homes that are on the market are never going to sell anyway because they're either priced wrong, they're not in good condition, their floor plans don't work for people. So if you look at that 20% being unsellable, that only leaves 1,390 homes minus almost another 900. So that only leaves about 490 homes, less than 500 homes in the whole Orange County area that are saleable type homes. I mean, that is creating an issue. Now, I want you to go back to 2007 when we peaked, because a lot of people think we're in a bubble and this is 2007 again. Look at 2007, almost 18,000 homes on the market. The demand was 2,000, okay? So you had 18,000 of supply, 2,000 in demand. That is, you can take that 18,000 divided by 2,000, that is 9 months of inventory, okay? That is a buyer's market. That's what it looks like. If you look at what we have 4,590, you divide 3,200 into that, and what do you have? Maybe 1.5 months of inventory or so. So you can see there is a big difference in this market versus 2007. This is not 2007, 2008. This is basically the same, maybe a little bit more clear how it reads, but it shows the closed listings as well. And you can see that gap between the orange line, which represents listings, and the green and blue line, which represents the pendings and the solds. And you can see how small that gap is compared to going back to 2007, and look at the gap between the orange and the green and blue lines. That was all excess. We just don't have that in this market. And so I don't care what you guys are reading out there. This is the true data, and this is why the market is hot. And I have another reason the market is hot that I'll explain to you. Okay, buyers and sellers. Buyers, I'm going to start with you, and actually I'm going to do a separate video on this where it's all chalked out on a board for you guys so you can see it. But I just want to give you the big picture of what's happening with interest rates, okay? Let's use that top of the market 2007 versus now, okay? Prices in the most active price ranges, let's just say they're up 40%. That would be a lot, okay? If I went through and I looked at like-for-like property, 40% is big, okay? It's probably more like 25 to 30% in most of the price ranges, and even less in the higher price ranges, okay? So just like that expected marketing chart, things have more demand by price, and they've moved up and down percentage-wise more by price. So let's just take the average house. Let's just say it's up 40%, okay? Well, interest rates were 6.25 back then. Now they're 2.75. You gain about 10% purchasing power for every single 1% change in interest rate. That means you have gained 35% purchasing power at the same time that the house has gone up 40%, okay? Now let's just look at the rate of inflation. You can do this yourself. Go online, type in inflationary calculator, what's a dollar worth now compared to what it was worth in 2007, and what you're gonna see is it's worth about $1.24. So let's just say prices on inflation alone should have had 24% inflation, but we had a correction in the market and everything else, right? So when you take where we are now, we are actually still about 15% lower on the effective price that you're paying for a house than what was going on in 2007. Couple that with the supply and demand that's out there, and you can see that this is why we have such a hot market. Also remember that people hold their houses an average of 21 years, so if you're timing the market or trying to time the market, it's really, really tough, okay? So anyway, I know everybody wants to buy at the best price point they can. I'm the same way, but guess what? You just can't time the market. But interest rates, fixed rate, 30-year, these rates are going to be amazing to have rates like this for the long term. So think about that. Sellers, you know it's your market. It's a strong seller's market. Where are you going? What are you doing? I know that you got to make life decisions. It's tough, okay? We help people think through all this stuff all the time. We can help you get your house ready, make sure it sells for the most money, and negotiate the best price for you as well. So the buyers want your homes. You just need to move forward. We know we got an election year coming up. That always gets a little choppy and weird. Let's not wait too long. All right, that's it for this week's Tustin Talks. If you need our help with anything, please give us a call at this number right here. And we'll see you in 2 weeks when we review the Tustin data as well as the Orange County data. See you then. Bye-bye. The Odell Group's been around for nearly 40 years. We are ranked number 9 in transactions closed, and we can give you the right advice to help you make good decisions. So please click on our subscribe button here and start watching the videos and let us know if there's anything we do to help you.